Well, thank you so much for being a part of our day and allowing us to be a part of yours. I'm Marlon Bowling. I'm your tour guide to the ag commodities. And as always, we like to take a look at our grain market activity in this first segment in each half hour. And we begin with our corn market. And we have the corn under significant pressure today. Although it's coming off of its earlier lows from last half hour, we're down on December by 4.25 cents. We're trading at 5.72, make it 4.5 lower now. Had been as low as 5.70, so significant pressure remains. If you look at soybeans right now with our quotes provided by bar chart, January soybeans chopping around. Now we're at 12.56 1/4, and that would be down a penny on the day, but we're off of our low by 8 cents. We're about 5 cents from our overnight high, if that makes any sense. I wanted to bring up one thing at this point here while we're talking corn and soybeans. We had an overnight export sale again, just like yesterday. And if you recall, yesterday we had one sale of corn, one sale of soybeans. Well, overnight we had a sale of corn and a sale of soybeans. Corn went to Mexico, 270,000 tons, and soybeans went to unknown destinations, 161,000 tons this morning. And it's like the market is pretty much totally ignoring it right now. Let's look at the wheat market, and we'll go to Chicago first, where we examine the December contract. A lot of weight there, 7.5 lower at 8.18 3/4. That would put us about 9 cents from our overnight high. In the Kansas City trade, you have the December hard red wheat. If I can get it to switch here, it's down 11.5 cents at 8.24 Wow, that's still about 13 cents from our high that we had in the overnight Globex session. And December spring wheat down 16 3/4 at 10.09 3/4. And again, it jumps off the screen that we actually got below $10 by a penny at one point this morning. Got as low as 9.99 and then bounced off of that. We're off of that now by about 10 cents, but significant choppy action. And December cotton up 19 points at 117.81. Brian Hoops joins us now. He's the president of Midwest Market Solutions. We were talking about the jumpy market in the wheat, especially in that Minneapolis wheat here this morning. But the other markets, corn's kind of jumpy too this morning. How come?
Yeah, the wheat market, Marlon, is falling here. There's been some talk that there's deliverable receipts or deliverable wheat being moved out of Canada into Duluth, Minnesota, delivery point. So maybe they're taking advantage of this higher dollar, but Canadian farmers are trying to move some product across the border to the United States. And that's pressured the Minneapolis wheat market and kind of drug some of the other wheat contracts lower with it, and pulling corn lower as well. Now, the corn market has had, as you mentioned, some private export sales the last couple of days, and that's a supportive feature for the market. But I think trade kind of views some of this news as baked into the market already, having a little bit of a correction in here, especially with the dollar rising, and that is putting pressure against the wheat and kind of dragging the corn along with it.
Well, I'm glad you brought that up. I was just going to ask you about that. December U.S. dollar index futures 305 points higher at 95.720, so that could be significant. I did want to ask you on the corn market here, if you look at December corn on a chart, does it appear to you like it is making a double top? Is that a thing in corn?
It's certainly a possibility. Yeah, you kind of rallied right up to that resistance that we came to a week or so ago and have pulled back again. So from a technical standpoint, there's a couple things that are happening, maybe not a lot of fundamentals, but that possible double top on the D's corn charts. There's a downtrend line that January beans have rallied up to today and have pulled back from as well. So corn and soybeans had some positive news, but just unable to get above these technical resistance points.
Yeah, that January soybean contract you referred to, it looks like maybe it just peaked above it just a little bit on that downtrend line, but boy, it's just right at it right now. Brian, we're going to take a look at our livestock trade when we come back here in a moment. Don't go anywhere. Brian Hoops is with Midwest Market Solutions. We'll have more after this. We're talking with Brian Hoops of Midwest Market Solutions, and one thing I wanted to look at, Brian, you and I like to talk about this off and on, but let's go to the big board here. And one thing I left out, what's going on with oats today? Well, we got to talk about oats. And you have December oats while everything else is going in the dumpster. You have December oats 13 higher at 7.36 1/4, within 2 cents of its high of the day and almost 20 cents off of its earlier low. Isn't that fascinating? So now the question is, what do oats know today? All right, let's go on to livestock. Sorry, I had to throw that in there. December live cattle, 32 higher now at 132.10. You have February up 15 cents. So a general friendly tone here on the live cattle market, at least so far today. Feeder cattle, with the weakness in the corn, you have January feeders up 62 at 159.10. So things looking positive on the feeder side. The deferreds are over 80 cents higher. December lean hogs up $1.77 at 77.57. That would put us within 30 cents of our high of the day, over $2 off of our earlier low. Brian, what are you looking at? Let's take a look at the cattle market here first. What do you see happening with that trade this week?
Well, we talked yesterday about the cash market's probably going to be stronger this week, and feedlots asking around 208, and we've seen some 207 bids starting to develop out there on a dress basis. The show list numbers this week, after they were assessed, they're about 215,000 head. That's the smallest amount for the entire year of 2021 so far. So that's down 15,000 head from last week. That's a positive for the cash markets. The only fly in the ointment is next week. We have Thanksgiving and possibility that we're going to see, reduced slaughter because of the holiday. But right now, it looks like the cash markets want to move higher. And even if we have a little blip here in the cash markets because of the holiday, post Thanksgiving, it's supposed to be even stronger. So maybe a tendency for some producers to hold back on their markings if they're looking at 2-3 weeks down the road to try and time that cash market before Christmas, where maybe the cash is even a little bit higher. But it looks like, certainly this week, feedlots in the driver's seat with the smaller show list numbers.
So on the lean hog trade, you look at those nearby contracts today, and big moves here, Brian, on the nearby is that December leading the way, $1.75 higher. I mean, that's quite a move. What does that do to the technical outlook now?
Well, yes, things are certainly improving. We're having a lot of short covering in the hog market. We've seen huge short covering in soybean meal. Well, that same thing is going on in the hog market from a technical standpoint. Maybe the fundamentals are not there to really support this rally in the hogs, but boy, the technicals are sure looking more positive. And because we're seeing so much short covering coming into the market, it's making the charts look a lot better, and that's encouraging some technical buying as well.
So maybe the longer-term lows have been made. We shall see. Thank you, Brian, for talking with us. Brian Hoops, Midwest Market Solutions. With that, Janet, I'll turn it back to you.